First, I want to apologize for yesterday's daily financial news being so late. Truth is, we're traveling between Iceland and Greenland, and not even Elon Musk's Starlink could help get a video loaded. It took over 23 hours to load yesterday's video. But we are going to take a shot. I want to welcome you to Greenland. It's pretty nice, actually. Pretty nice out here. Let's do the daily financial news because that is why you are here. A couple of things to note. First and foremost, 30-year mortgage rates under 6.5. They are now 6.43. What does this mean? It means it's relatively easy, in my opinion, to get a mortgage rate with a 5 handle on it. Now, these rates are obviously owner-occupant. If you're an investor, you will pay a little bit more. But yes, mortgage rates certainly seem to be going down. There is a significant expectation of 75 to 100 basis points in cuts this year. Could we see mortgage rates sub 6 by the end of the year? I don't know about you, but I certainly think it's at least possible. Don't know if you saw this, but Canada has imposed a 100% tariff on imports of Chinese EV, matching what was already implemented in the United States. Let's talk about the consumer. What is Walmart versus Home Depot saying? And is there any lessons in what they're saying for you and I as economists? Well, first and foremost, Walmart CEO Doug McMillon. We are not seeing a weaker consumer overall. Now, the Home Depot CEO says quite clearly, consumers are quite simply pulling back. Now, let's think about what Walmart and Home Depot are and see if you and I could learn anything from it. Walmart, first and foremost, is the largest grocery store on the planet, or at least in the United States. So, food is a staple. It is something that we absolutely need. Home Depot, not so much. Now, they may have some things to repair, toilets and things of that nature. But when you really think about Home Depot, it is predominantly a discretionary spending. Also, when you think about Home Depot, typically you go in and do a large capital remodel. You are going to do that once, a decade, once every 20 years. And again, something I've been trying to help educate you is I think a lot of that work was pulled forward during that pandemic. Money was free. People were staying home. Once you've remodeled the kids' bedroom, added a deck, whatever, you don't do that again. So I don't think Home Depot saying the consumer is pulling back is anything more than created an air pocket because we are simply not selling enough homes and we are not doing enough remodels. Fed President Barkin, lower, excuse me, sorry about that. Lower, higher, lower, fire. What does that mean? It's taking longer to hire people, and they are staying longer. Means that companies may resort to layoffs if the economy weakens. This is something I think the Fed is truly concerned about. They are seeing a job market that is clearly weakening. We lost roughly $1 million people in revisions, right? 818 plus 12 months of revisions, actually 1.2 million. Shout out David Sachs for that number. And again, it's just not as strong. So if people are just holding on and we're not seeing the turnover, if the economy does weaken, you could see a round of layoffs. One of the things Fed President Barkin did say, and you've heard me talk about it on this channel, lots of demand for housing once rates come down. There is a risk of home price growth reaccelerating once interest rates drop. This is a problem, folks. We don't have the inventory. The inventory we do have is bifurcated. We are seeing stuff above the median stack up. Below the median is still scarce. So if we unlock more demand, aka marginal demand, will we see the lower end of the market skyrocket? I think it is possible. Fed President Barkin also says we are starting to see disinflation spread from goods to services. What does that mean? Well, first and foremost, folks, disinflation is not deflation. We are simply seeing slower inflation. And lastly, it is very clear, according to Fed President Barkin, that consumers are trading down. This is the Nordstroms to Macy's, Macy's to Target, Target to Walmart, Walmart to Dollar Tree, Dollar Store, things of that nature. Then we got an update from Wells Fargo on where they expect mortgage rates to be at the end of 2025. Shout out Lance Lambert. Wells Fargo now sees 5.8% by the end of 2025. How about buyer's markets? You and I have talked about a buyer's market now for quite a while. I actually have the top 10 lists of where buyers have the upper hand. And we are going to go from 10 to 1. And let me know what you see in this list. Again, we're going to go from 10 to 1. These are the cities with the most active buyer's market. What is a buyer's market? Where the buyers are in control. Listings are stacking up, price discounts, all concessions, all of those things. Here we go. Orlando, Florida. Gainesville, Florida. Port Lucie, Florida. Miami, Florida. Northport, Florida. Tampa, Florida. Crestview, Florida. Lakeland, Florida. Punta Gorda, Florida. Folks, if you're counting, that is from 10 to number 2. So what do you think number 1 is? Well, it's not Florida, which actually shocked me as well. It's actually Lubbock, Texas. Lubbock, Texas comes in with the largest buyer's market, where the buyers have the upper hand. Let's give you some details from Mike Simonson about the active inventory. We saw active listings across the United States grow by 6,000 to 704,000. That is the second week in a row where we saw inventory growth less than 1%. We had 65,000 new listings, up 9% year on year, but down 4% week on week. Median price of listings, $449K. Price drops just under 40%. So 4 out of 10 properties have had at least one price reduction. Durable goods yesterday came in with a monster number, but a lot of things that, like the government's reporting, you got to look below the details. What was reported? Durable goods up 9.9%. That is a monster number. Again, last was negative 6.9%. So how the heck could we go from negative 6.9 to positive 9.9? Well, I wish I had a better story for you, but the answer is aircraft. We basically went from a negative $4 billion in orders to $23.4 billion. Yes, folks, if you X aircraft, core capital goods were negative 0.4%. That is important. That'll be a big part of GDP. Again, negative 0.4%, where we were expecting slight growth. Saw an interview with Ken McElroy and Robert Kiyosaki. A couple of things that I thought were interesting was the headline, how to use the 2025 crisis to get wealthy. And then the one point I did take from it is lots of people talk, but very few people do. So again, what am I doing with the crisis that I think is ahead of us? First and foremost, I am shopping for the small multifamily 5 to 50. If I find an opportunity that is distressed financing, we will likely 1031 out of our houses into multifamily. Again, that is what we are looking at doing. Basically repeating what we did in 2006. I look for the opportunity to expand our portfolio, to grow our cash flow. I will be looking for opportunities to extract capital if one comes available, but really what I'm looking to do is find a distressed financial situation, pick it up with equity that exists in a house already or two, and then finally grow our portfolio. And then lastly, got an update on Las Vegas real estate. Las Vegas real estate last month was just on fire. It was the best July ever for Las Vegas real estate in the luxury housing market. Now in Las Vegas, the luxury housing market is described as $1 million or higher. In the month of July, there were 171 closings. The previous record for July was 167. So again, July 2024, 171 closings over $1 million. Yes, folks, that's what we got for you today. Let me give you a quick view of Greenland, and we'll call it a day. Put my notes down, pick this up, and there you go. This morning when we rolled into town, it was overcast, and now we're just starting to see a mountain behind that. I didn't know that was there. And in case you wanted to know, we are tendering to shore today. Yep, we are tendering to shore. That's always fun and exciting. So, hope you have an amazing day. I know we will. We'll talk to you again tomorrow. Later.